In this video, I want to answer a question I get asked most often. What should I buy in the stock market if I am a beginner? What is up everybody, Gifford here. I have over $100,000 invested in the stock market and in all my research. If you don't want the hassle of learning about individual stocks, you can still 10 times your money just by following a simple strategy and buying a diversified ETF. So stick around and don't miss out on this opportunity. The answer is simple, it's just one ticker symbol. That ticker is VT, the Vanguard Total World ETF. But before I show you how to buy or invest in it, there are some very important things we need to cover first. Number one, understanding where investing fits in your financial life. It's critical to know how investing aligns with your overall financial goals and plans. Number two is an example of how to 10 times your money in the stock market using SPY. I'll provide a practical example to illustrate how you can potentially multiply your investment significantly with SPY and how it differs to VT. With this knowledge, you'll be better equipped to understand what to invest in. Next, I'll walk you through the steps to actually buy the stock using Sharesies. Finally, I'll discuss why most people fail in investing and how you can avoid these common mistakes. And also stick around for a summary at the end. Starting at the top of the list, living is expensive. That's why having a regular income is essential. It all starts with securing a job to cover your everyday needs. This also gives the added bonus of starting KiwiSaver. Once you have a steady income, managing your money wisely is the next step. Creating a budget helps you track your spending and ensures you live within your means. An emergency fund is critical. This spare money is for financial emergencies, allowing you to save consistently each week and plan for repayments if needed. Saving for a house or mortgage is another significant goal. In New Zealand, property ownership is a viable way to build wealth over time. Lowering your weekly expenses can increase your savings rate. By investing and reducing your bills, you can free up more money to save or invest. Finally, consider investing in the stock market. It's a powerful way to grow your wealth over the long term. This graph shows the stock market gains and losses over the last 60 years. By investing in SPY, you can see that there have been many opportunities to make money in the stock market by following a simple strategy. This is why the idea of making 10 times your money isn't so crazy. Let's use a calculator to show you how money grows. By taking the returns from January 1994 to June 2004 and investing just $1, we get a return of $11, which is over 10 times your money. The crazy part is, if you reinvest your dividends, you would get double that amount. This is proof of the power of compound investing. The dollar cost averaging method is all about capturing all the highs and lows of the stock market without trying to time it. This brings me to the question, why choose VT over SPY? VT, or the Vanguard Total World ETF, is a global fund. While it may offer slightly lower returns compared to SPY, it provides broader exposure by investing in the global stock market, not just a single country. For the global stock market to go bankrupt, the entire financial system would need to collapse first. This makes VT one of the safest investment strategies. So investing in VT and Sharesies is pretty easy. If you want to join, see the description below and you can hit on my link. So we're here inside my portfolio. All you have to do is click investments. So once you set that up, you'll have one of these. And down here, I've already got VT, but if you don't know, what you do is you hit explore. Then at the top here, you just type in VT and it comes up with Vanguard Total World Index Funds. See, ticker symbol VT, and it's on the New York Stock Exchange. It's currently at $111.03. Click that, brings you to the screen here. At the bottom over here, there will be a buy. So once you've loaded your wallet with some money in it, your Sharesies account, you can see that the estimated wallet that I've got at the moment is $112. So you just hit buy. And then to make it real easy, you just want to do a market buy in dollars. This means lets the market decide the price you pay for the shares, whatever the cost is of VT, then hit next at the bottom, and then it just asks you how much money do you want to invest in. Obviously it's in US dollars, so you have to fund your wallet and then after that convert it over to US dollars. So for me, if I was doing this, I'd just hit $50. It's a good amount. Hit review. Here it just tells you how much you're going to invest in, what the transactional accounts are, but you can see that mine is paid with a $3 amount. Here you can see the transactional fees are. It's at $0 because I've got a $3 plan in here. And if you want to buy, just hit buy. Shows you here that they're placing the order. Now obviously it will only buy if the market is open. So if you're in New Zealand, it's currently the weekend for me, so we're not going to buy anything right now. And you can see here from the little dots my previous buys of VT, and I don't sell any of this at all. It's just been me buying consistently for the last year. This is the strategy for dollar cost averaging. This brings us to top reasons why people fail at investing. Number one is lack of consistency and long-term strategy. The average person struggles to invest consistently and doesn't understand how to invest for the long term. Number two is unclear goals. Many people don't know what they're investing for. Is it for a better lifestyle or retirement? Number three is insufficient funds. Successful investors often have significant incomes from their businesses, which allows for substantial gains. For example, if you invest just $100 once and get 1,000 times return, that's still only $1,000, not a life-changing amount. Number four is understanding priorities. The wealthy understand the importance of prioritizing investments and how stock returns can compound over time in the stock market. So to summarize all this, invest long-term weekly and a total world index fund using the DCA strategy. This means you don't miss out on doubling your money over time due to inflation. I started to take investing seriously 4 years ago and have been investing into KiwiSaver for over 10 years to now have a portfolio of over $100,000, which I think anyone can achieve in their own timeline if they really wanted to.
The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand.
Well, that is enough for me today. Thank you so much for watching. Before you go, please hit that like button on the video as it helps me out for this video to reach new people who would like this information, and feel free to subscribe for future videos I make. Click this end video here if you want to see what's in my $120,000 stock market portfolios. If you want to hear more from me, you can follow me over on Instagram where I'll post stock market related news and what I'm doing in the market. Catch you in the next video, and goodbye for now.